What's up, guys? We're going to change it up today. Today I'm going to be in front of the whiteboard and I want to talk about credit cards. So many people think that by having a lot of credit cards that that's somehow a bad thing. A lot of credit cards is not a bad thing unless you have bad discipline. And I'm going to explain to you a little bit about why and how all this works. The first thing is this, guys. When you look at your credit, you're building your FICO score, okay? One of the things that you'll see is you want to have 10 open active accounts. What's an easy way to have an open active account that doesn't take a whole lot of management? It's a no annual fee credit card. If you have a credit card that has no annual fee, doesn't cost you anything, as long as you use it once or twice a year, that card will stay open. Well, why is that good? Number one, it helps towards your 10 active accounts. Number two, it's going to show on-time monthly payments. Even if you use it once or twice a year, assuming that that card doesn't have any missed payments, it's going to report positive on-time payment history. So you could use it 1 month of the year and get 12 months of on-time payment history throughout the course of that year. Next, low utilization. What's a great way to keep low utilization? To have a couple extra credit cards that sit in your safe or your sock drawer that you don't use other than once or twice a year, because you don't have to worry about maintaining them. So those limits just get to hang out there with no spend on them. And by having multiple cards with $0 in actual balances or utilization factor, that's another thing that's going to build and boost your score. And the last thing is, if you have a credit card that you keep open 10, 15, 20 years, that's going to boost your age of credit history. These are all simple things that you get to gain by having a credit card. Now, when you are looking at credit cards, let's just say these are the total limits. It's important to have a couple cards that have, let's say, a $10,000 or higher limit. Now, some of this may be subject to how much money you make in income, but typically you can always build up to at least $5,000 or $10,000, okay? Now, what cards do you want to have with $5,000 or $10,000 limits? These are what I call everyday cards, okay? Just like the American Express everyday card that I have, it's because I put so much on it. I put my grocery shopping on it, I put my utilities on it, and any little spending that I do, I'm typically going to put on that credit card. That's why I want to have a high limit on that credit card, which is why you want to use that card as much as possible, because the more that you use the card, the more they're going to increase the limit. The higher the credit limit, the harder it is to affect that utilization factor. Then you may want to have another card like let's just say it's a cashback card. A cashback is really good. A cashback card is really good because what it does is it's easy to maintain and manage. You don't have to figure out points and transferring points and how many points you need for this or that. At the end of the year, the end of the month, whatever it is, they're going to say, hey, you've accumulated X amount of dollars of cash back. You can either apply to your balance or whatever the monthly statement is, or they'll send you a check. It just depends on the bank. The next, you may want to have some other cards for other things like, let's say, Costco. If you shop at Costco like I do, I get $300 of cash back from Costco every single year. Why? I put all my Costco shopping and I put all of my gas at Costco on that credit card. 4% back, guys. You're not getting that from your debit card. So all my Costco card limit has a $10,000 limit. My everyday preferred limit has a $15,000 limit. Again, these are limits that I've built. This doesn't happen overnight, but you have to realize credit's a long-term game. It's not going anywhere, okay? Just think if you just started building credit at 18 years of age and you knew what to do, you knew how to do it, and then you actually did that, what would your credit score look like today? What would your interest rates look like today? And what would your approval odds look like today? Not only that, what kind of travel? Let's say you have a travel card. Let's just say this is an American Airlines card, okay? Or let's just say you have a Marriott Bonvoy card. These are great cards. If you want to get away once a year, get an airlines card. It doesn't have to be American Airlines. It could be anything. It could be Southwest. It could be American. It could be Frontier. Depending on what airlines fly out of your area, get a credit card for them. You want a free night a year? Get a Bonvoy credit card. Or maybe get a higher Bonvoy card where you get an anniversary night plus the points. Put the spend on there. You don't have to have high limits on this. And you may only use these cards 2 or 3 times a year, maybe 5 times a year. That's okay. You don't have to use them a lot. You should be putting your spend on cards like the everyday cards or the cashback cards. Or let's say you have a dining card, okay? Like the American Express Gold card. You want to use cards that you're going to get the best return on. But you may have, like I have, let's just say this is Police and Fire Federal Credit Union. They gave me a free card. Guess what? I kept it. It's $20,000 credit limit. I hardly ever use the card. It sits in my safe, but guess what? It helps me with my utilization factor. Let's talk about this. if you have, let's say you only have $10,000 of total credit limits, you want to stay below 10%. It's the magic number. You need to be below 10%. 10% of 10,000 is only 1K. It's really easy to spend $1,000 in 1 month's monthly cycle. But if you build up and you have 100,000, 10% of that is 10K. It's a lot harder for you to get to $10,000 than it is for you to get to $1,000. And that's a great way for you to keep low utilization. And this will help maximize your score. The higher the credit score, the lower the interest rates, the lower the insurance rates, the higher the approval odds. All these different perks, benefits, and things that you will gain from by maintaining a couple good credit cards. I always say the magic number you want to have is 5. No less than 5 open active credit card accounts. I have 22. I don't recommend that for everybody. It works for me for my lifestyle. Most of those cards, they sit in my safe. I never touch them, never use them, but once or twice a year just to keep the account open. And think about this, guys. You have these couple accounts here that have $0 balances. $0 balances. Guess what? You add your 13-year-old kid as an authorized user. By the time they're 18 years of age, depending on how many years you've had that card, now your kids are going to get to assume all of that credit history. Imagine if you could hand your kids an 800 credit score by the time they're 18 years of age. Now, you have to explain to them what that means. You have to explain to them how you got that, and you have to explain to them the importance of it and why they should maintain and manage that themselves. But imagine being able to hand your kids an 800 credit score by the time they turn 18 years of age. What would that do for their ability to get a job, to get an apartment, to buy a house, or even to finance their own car? So you don't have to co-sign for them. All right? This all comes from credit cards, guys. So I hope this was helpful for you guys. Again, even if you have lower limits, let's just say you have 5 or 10 cards and they only have $1,000, $3,000, $5,000 limits, that's still better than only having one card with a $1,500 limit. It's too easy to max out that credit card, and it's too easy for that card to hurt your credit and your finances. So do yourselves a favor, invest in a couple different credit cards. Hopefully this explains to you why you should have multiple cards. Again, you want to have your everyday cards for utilities and stuff like that. You want to have a dining card, a grocery card, your travel card. And whatever you do, guys, don't go after the shiny cards because you think that they look cool. First off, there's no point in paying an annual fee if you're not going to get the return out of that spend. Secondly, just by having it doesn't mean anything. It doesn't make your life any better. Yes, it may be cool. Yes, that one time a year you get to use the card. That's fine. But if you're not actually using the card for what it's designed to do, don't get it. Get yourself an everyday card. Get yourself a Discover card or a straight City double cashback card, which gives you 2% cash back on all purchases. It's much better for your overall finances and your well-being. Plus, you don't have to manage a whole lot. Simple cashback cards are great for that reason. If you like to travel, go after cards like the UR points from Chase and the MR points from American Express. But the point is, invest in credit cards, invest wisely in them based on what you spend, where you spend your money, and what you want in return, okay? If you spend on gas, groceries, stuff like that, get a gas groceries card. If you want travel, get a travel card. If you want cashback, get a cashback card. Keep it simple for yourself so it doesn't become work, all right? Hope you guys have an awesome day. Looking forward to catching up with you in the next video. Take care.